Good afternoon, everyone. We just had a little technical issue. Don't know if everyone heard me well. My name is Alexander Gerchik. I'm a professional trader. I've been in the industry from 1998, trading my own money, and recently, in the last few years, more than a few years, in about the last 5 to 6 years, I started trading my clients' money. Just tell you why should you listen to me, where did I start, why basically I do know what I'm talking about and why I can teach you. I started in 1998 as a professional prop trading firm at the company named WorldCom. We've been hired as a professional traders and given everyone, let's say, months to 2 months period of time to show if we can really trade, we can make money for the firm. If yes, you'll stay at the firm. If not, basically you leave. We start with the firm with a very little amount of money, and the firm giving us a leverage. It's called a prop trading firm. Um, when I started in 1998, there's not that much I knew, and the most important thing was at the firm, it's the not to lose money. So when we start trading, the most important thing, when you're not losing it, hopefully one day you're going to learn and make money. So we were basically working at a very strict risk management and money management. So the most important thing is not to lose. When we started to trade, we don't know much about the trading. All of us pretty much in the firm had at one point almost a few thousand traders. I was in the top 10 traders at the company, and few years in a row, 2000, 2001, 2002, I made more money than anyone else in the firm. How basically I did it, I understood right away that it's all about the charts. So what's there on the chart I'm looking for? The most important thing what I'm looking for on the chart is the buyer and the seller. So when I show you the charts, I'll try to explain for you. What's the reason to listen to me? In 2006 in the HBO series Wall Street Warriors, I've been chosen as the very safe trader. I'm on a lot of different traders just because I'm very safe. I use stops all the time and I just refuse to lose. So maybe I didn't make billions of dollars like other big traders, but I did make a lot of money in the tens of millions of dollars in a firm. We basically the most important thing was to make money for myself. So I would start right now. What I did, I took a chart. When I took a chart, I tried to understand what exactly is going on. Where's the buyer? Where is the seller? Just for you to understand. A lot of different times, you look at the different seminars, you look at the different people who try to sell their service. I'm not trying to sell you anything. I'm just trying to for you to understand and explain why I'm good at what I do. The most important thing, I open the chart. I start to figure it out one thing. Is it only two people on this chart who is fighting for the price? It's a buyer and a seller. Obviously, if you take a look at the chart, you always see a few different prints here and there, here and there. Not all the time chart will tell you what to do, to buy or to sell or to do nothing. What I'm trying to understand, it's who is buying, who is selling, and why they're doing it, and where they're going to bring the stocks. Just what I start to do. First, most important thing, it's levels. What is the level for me? I mean, if you open any book, technical analysis, John Murphy or Larry Connors or anybody else you can see in the book, the people are saying about the levels, resistance, support, and everything else. I pretty much using the same levels, but in a little different interpretation, not like everyone else. For me, the level is where the buyer and the seller fighting for the price, and I'm trying to figure out who is stronger and why their level is basically stronger than anyone else. So just for you to give you an example, hold on one second. Looks like the Google is giving us a little trouble, but we're back on track. This is just a chart, let's say a euro against the US dollar. First of all, just for you to understand, it does not really make a difference what you trade. For me, I figured it out over the years. I mean, it's good to know what you trade. It's good to know, let's say you trade stocks, futures, or forex. It does not really make a difference. For example, this is a chart of a euro dollar H1, which is the 1 hour chart. Why and how we basically put in the levels. First of all, what is the level? You can put the level everywhere. It's either the false breakout, either a lot of times when the level has been touched, or a lot of times where the level has been broken down. Just for you to understand, this is a stop on the chart. For example, if you take a look, where it's a lot of different touches. You see, if you take a look at this line many times, we did touch that level. So if the price, it goes around the level, you understand one thing, that somebody's sitting there. It's either a big buyer or a big seller who basically, once they're gonna win for the price, they're gonna take it lower or higher. So let's take this level, 1.112. If you can see all the time when you have a big bar or big candle, once it goes against the chart, against the level, you understand one thing. It is a problem. Why? Because usually the level would definitely stop a big bar or a big candle. What happened in this case, if you can see, we had a false breakdown, we went down all the way, then we start to test the same price again. So if you take a look how this level came up, you can see that's many times 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and so on. Many times this level been basically touched. What does it mean? The price always go around the levels. For example, if you take a look here or there, this is just a small downtrend and a small uptrend. But if you can see, the price always goes around the price from where the move is going to be made. So once you identify the level, then you have to have what you trade. For example, there's a few different things we can trade. Let's say it's called pattern. The first thing, it's you trade a limit buyer or a limited seller. What does it mean? You're trying to figure it out if somebody have a limit order on a chart, and usually it's going to be at the same price. For example, if you're going to take a look at this chart, this is chart number 2. Hold on, I'll show you again. You see, this is the example of the limit buyer and the limit seller. This is a daily chart, and this is 5-minute chart. As you can see, the price during the day turn. So what it is, you can see that there's been some limit seller, which is not allowing the stock to go any higher. If you're gonna take a look at this side, that you can see there is a limit buyer, which is not allowed to for the price to go under, which is the holds the price, which is the limit buyer as well. But once here you have a turnaround in a daily chart, you can see that somebody is trying to build the limit positions. If you're gonna take a look at here, I'll make it a little bit bigger. You see somebody is building the position. First of all, this is a round number, which is usually increasing the level of the level. What does it mean? If you see the number of a level and a round number like 24, 23, 22, that means that somebody is working with options and building the position around the round number, because you cannot have option, let's say, of 23.30. You can have a option position of a $24 straight. So if you can see that, it's called a mirror level, where the resistance level becomes the support level at the round price. So once here, you can see the level was 24, which is basically wasn't there before, because if you take a look at the daily chart, everything was fine. It was just a uptrend. But then you can see intraday that this price has been identified as a limit seller. Why limit seller? Because you can have a limit price, the level is not broken, and it shows the same price of $24 all the time. But once you go to the next day, you see a breakout, but the most important thing, you have a consolidation above the level. You see, a consolidating stock over $24 a share, which shows that it's been a limit buyer with a few false breakout, which is not bringing the stock down, and the stock is building a big base. This is a pure example of a limited buyer who is not taking the stock lower. It means you can put a short stop, you know exactly the direction of the stock, because if you can see on the daily chart, you have a uptrend, and you can see at the $24 level, somebody is building a large position. Most of the time is the big buyer who is not letting the stock go lower for one simple reason. Whoever is selling the stock, and as you can see, once the stock in the straight line, you know there's somebody's buying, somebody's selling. Once the stock goes higher, you know there's been more buyers than the sellers. When the stock goes lower, it's been more sellers than the buyer. In this case, when the stock is going in a straight line, you can see that somebody is buying and selling. But if you see go above the level, you know there's a buyer is bigger than the seller. If you start to build in the position like here, below the level, you know there is a seller is much stronger than the buyer. So once you're going to see the stock is consolidating above the level, you say that somebody is buying a large position above the level, and the stock is going to go higher. In this case, this is a limit buyer. This is a limit buyer. But as I said before, we'll go to another picture. This is the first thing to identify the right level. So as I said before, once you identify the level, you see why this level, the first and second level have been identified. The first level is because we basically broke the trend, then we turned around, and then we broke again. We're consolidating above the level. And if you take a higher level, you know one thing for a fact. First of all, there's a big bar, which is hitting against the previous level, and it's a first turnaround. And this is a false breakout bar because with this bar, the stock didn't go higher for one simple reason. It broke the previous high, but it couldn't go. So we call this bar as a false breakout bar. But the most important thing, once basically we identify the level, we know it's definitely going to be a move sooner or later against that level, because the big buyer and the big seller, they're fighting for the price. And the most important thing, they want that level, just in order for them to understand what kind of price was there. So once you identify the level, you start to trade. What we have, there's a few different patterns to trade. You either trade the limit order, like I showed before in the previous chart. You can have a false breakout. For example, like here, you have a breakdown, break up, and then come back to the same level, or you can basically trade a breakout. The most important thing of a breakout or a breakdown or a false breakdown or false breakup or a limit order, it's one thing. You can trade only one position. What does it mean? If you identify the level, you can do anything you want against that level. If you want to trade false breakout, you trade the false breakout. If you want to trade level, you trade level. If you want to trade, for example, false breakout, hard one, you do that. Hold on, I'll show you. I'll try to show you right now. I'm taking the paint, and I'll be basically going to paint it with you just for you to understand how does it work. For example, this is the assuming this is the levels. Hold on. This is the levels. We identify the levels first in the daily chart. The second thing, once we identify the levels, for example, here, right? We want to figure it out what to do. There's a few things we can do. If there's a limit people who's trying to identify the limit seller, we can basically trade that level at the short side. What does it mean? Once you have a consolidation below the level from a daily chart, you figure it out that the stocks wants to go lower because somebody at the top is not letting the stock go higher. You understand? Some people who wants to trade a breakouts, they put in the stop right here, right at the top, and try to trade stocks higher. So what it is, the first thing is to do it, is to identify the level that you trade. That's the most important thing. You take any daily chart, you identify the level. Once basically level identify, you know what to trade. Let's say if you identify this level and you want to trade the false breakout. How the false breakout works, the first thing, it's the level has to be breaking. That's the most important thing. Once the level is broken, you know that this level do work out. The second thing, if you really want a false breakout, what do? You put in the sell stop. Once basically the stock is coming back, you figure it out. That's all of the guys who bought it before. It's going to go lower for one simple reason, because they have to put stops, protecting stops somewhere at the level where they're going to sell it. Let's say if you want to have a different false breakout, there's a false breakout with a few bars. You have to wait until this bar is going to close up. Then somebody is trying to buy it, the stock higher, for one simple reason. They think that it's going to go higher. But you figure out one thing. That's going to be a level where everybody is going to put stops. Everybody put in the stops above or below level. So once these guys, all of them, bought all of the stock, they're going to put a stop at the same level. And then once it breaks down, it's going to go lower because everybody is going to sell it. It's going to work as a stops orders, and it's going to go just because everybody's going to sell market, because it's a catastrophic move for them. We're going to try it right now. In order not to be a smart ass, we're going to try to go with the real charts, and we're going to figure it out what to do. Okay, what do you see here is the Canadian dollar index. A few days ago, we identified a hard level. I will make it a little bit bigger. So Canadian dollar has a problem at 75. As you can see, once it breaks lower, it's supposed to go lower. The most important thing, what to take as a level. What to take as a level, you take the previous low. The previous low on this bar, you can take a look, is the 74.88. For example, you identify the level. That's the first thing you do. Once you identify the level, you basically figure it out what to do. What do you want to trade? You want to trade breakdown, you want to trade the false breakout, false breakdown, or you want to trade something else. In this case, usually, since all the currency, they are range instruments, it means they do most of the time trade in a range. You should understand one thing. A lot of times you have to trade the false breakdowns. So what do you see in this case? You do see the level. That's the most important thing, a level. Why? Most of the time you're going to ask the question, why you're not going to take it this level? One simple reason. If you're going to take a look, this red bar against this bar, it's been a false breakdown. So in this case, you cannot take that previous bar is a lower level for one simple reason. If you would close lower than the previous lower bar, then it's a different story. But once it's breaking higher and it's not closing, you can see that the stock is going higher. So what do you have in this case? You have a false breakdown. You see a big one, even though it's a video, very, very small volume, but you can see it broke down and it came back and it's closed. So what it is, as of now, if you're going to take a look at the whole picture in general, you have a long signal. So in this case, the chart shows that you have a long signal for the Canadian dollar because you have a signal which is not going lower. The problem is usually after a very strong breakdown and a false breakdown, you have to have an impulse. What does it mean? Once basically it took all the guys and it went all the way down to low, after that it's supposed to go much higher and go fast for one simple reason, because a lot of guys who try to accumulate the position, they bought the position. Once they see a new low, they're trying to get out. And if after a false breakdown, the stock is not going high and it's not going fast, most of the time it's a false breakdown. The beautiful part about the levels, that's you can get with the short stops. That's the most important thing. So what it is, if you're trying to get long in this position, which is, honestly, it doesn't look like it's going to go higher, as I said before, because it doesn't have an impulse. So you can have a very short stop just right under the low. And once it's going to break the low, it's going to go much lower and then retest the low. That's probably what's going to happen. Or if, let's say, you're a believer that the Canadian dollar is going to go higher, you can right now enter the position with a very short stop, let's say of 25 pips, and just sit in the position waiting until probably if it's going to be impulse to the upside, which I don't believe. So that's the beautiful part about trading the levels. Let's say we'll take another one. Let's say we'll take a British pound. If you're going to take British pound, for example, and a few days ago, we identified the level. That's the level that's we trade, as you can see. So what it is, if you take a look, this is a very strong level of 151.45. Now, the most important thing is for you to figure it out why it's going to stop there and what exactly it's going to do. First of all, you had a very large move of from 156 to 151, and it's fast without the stops. So you can really count here. They can be definitely a false breakdown, a false breakout. So what it is, you see, once we break 151.50 and it's going to hold right below, then definitely it's going to identify it as a too low side. But once it's going to come back to 151.45, if it's going to come back, then you can have an impulse to the upside with the short stops. So the most important thing, as I said before, just for us to understand in our first lesson, it's how to identify the level. But if you're going to take a look, why this level been basically great? Because you can see that the second move to the upside start in the same price. You see, this is a low over 151.146, and this is the high of 155.45. So you can see there is definitely a limit orders which was there. So the most important thing, once you identify the level, you know now exactly what to do against this level. So the most important thing is first identifying the level, and second thing, to trade that level like you trade. If you are a breakdown guys, you trade it with the breakdowns. If you're a level guys, you trade it with the levels. If you're a false breakout guys, you trade with the false breakouts. One more example, I think it's going to be good enough for the first day. We'll take an Australian dollar. If you're going to take a look with the Australian dollar, it's trying to basically to consolidate. But you see, we did not touch the low. If you're going to take the low of this bar, it's a 69.05, and the low of this bar, 69.09. Usually, if there would be a big buyer in Australian dollar, big buyer, he first would probably take a look at the low, go all the way to 69.04 or lower, do a false breakout, get the stops from everybody because everybody would be scared, and then he will take definitely higher. But as you can see, he did not touch the low, so most likely it's going to be definitely the low first. Once we're going to touch the low, then we're probably going to go lower. But it doesn't look, we're definitely going to go higher because the big buyer did not accumulate the position. What I was trying to do in our first little webinar, it's to show to you what exactly do I trade. Now you can basically like us or don't like us, send us the information with the questions. You can send us the charts. We can, in the next lesson, we can basically put all the charts that you sent us together, and I'll explain right before something happened, but not after. I will tell you about the chart, where it's going to go. Obviously, I don't have another rocket scientist and I don't have a crystal ball in my hands, but I know one thing for a fact, that if you're identifying the right levels, if you identify the big buyer and the big seller, that you're not supposed to have a problem. We can take any possible chart. You know, it can be a wheat futures, or let's say it can be a natural gas, or it can be, I mean, by the way, natural gas did extremely good false breakdowns. If you can see, it's a fantastic false breakdown right above. I mean, take a look. Red bar has a high of 26.07. Most likely this bar, the previous red bar, would be 26.05. You see, it touched only a few cents right above, and it did and went all the way down. So the most important thing is to identify the levels first. You see, and this is the level, because the price all the time going around 26. Once you identify the level, you see, it doesn't matter what you trade. It's S&P or anything else, or NASDAQ, or a pound or a New Zealand dollar. It does not make a difference. You see, that's the level, very important level. Here you can see that the New Zealand dollar is trying to go up because it did the false breakdown. You see what it did first, it closed down, which shows everyone that is trying to go much lower, but then he managed to come back, and now it's gone much higher. So right now, what I did in the first hour round of meetings between me and you guys, I tried to explain for you right before what it's going on or what it will happen in the chart. Now, you know, if you did like it, what I said, you can follow us, ask us questions, and I hope it's really going to work out for you. As I said again, my name is Alexander Gerchik. You can basically go online, take a look at the show Wall Street Warriors, so at least you're going to know who I am. You know, I'm not just a guy from the street which never traded before. I've been in the trading industry for almost 18 years. You know, I'm a professional person. I have a license, Series 7 license. From United States. As I said, I've been in the industry from 1998. Overall, in the securities industry, I've been in 1996. You can go take a look online, take a look at the Wall Street Warriors, take a look at the charts, what I have. And if you like what I said, you're more than welcome to write us, and we're going to start asking you questions and answer your questions. What do you have? It does not really matter. What do you trade? Forex, stocks, futures. It does not really make a big difference for us, but we'll be very happy to answer your questions. If you have one, please write us. It's been Alexander Gerchik with you. Thank you very much.